Hey, welcome back. Today is April 10th, Saturday, and on this post, I'll be telling you about the overall crypto markets, which includes Bitcoin dominance and Bitcoin price action, and see how they could potentially affect the overall altcoin markets. Before diving into Curve DAO token, CRV, USD, and see what is going on in here, I'll be telling about the bullish and bearish case scenarios for today, as well as the short-term price prediction on this market, according to what I'm seeing on the charts. Before I begin today, if you guys are enjoying this content, make sure to subscribe to this channel and like this video, as I'll be keeping you updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 2 free stocks as of today upon a successful sign up and a qualifying deposit of $100 US. And I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor and this is not financial advice. I am purely sharing my own speculations and opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market, as extremely risky and volatile. If you have any questions or comments, please do only leave them in the comment section below, but I will try my best to get to as many of them as possible. Now, see what's going on in this market first. Most importantly, I do take a look into Bitcoin dominance. Tells me where the money could be trending into. Would it be Bitcoin, altcoins, or neither? Today, we have Bitcoin dominance right now as we speak, down about 0.5%. This breaks down to Bitcoin price action up over 1.6%. Total altcoin market cap up over 2.7%. Now, this is the upside of Bitcoin dominance trending downwards. I will usually see total altcoin market cap leading in gains ahead of Bitcoin. I usually emphasize Bitcoin dominance to trend downwards. That's generally speaking better for the altcoins on both the upside and downside. Because conversely speaking, if Bitcoin dominance was trending upwards, the upside of that, I would usually see Bitcoin leading in gains ahead of total altcoin market cap. On the weekly time frame here, we are still in a falling wedge pattern on Bitcoin dominance, which is generally a bullish pattern. If Bitcoin dominance actually breaks out of this pattern to the upside, that's not as ideal for the altcoins, because the best case scenario in that sense would be if Bitcoin is also trending higher with it and total altcoin market cap trailing behind Bitcoin. The worst case scenario is if Bitcoin dominance breaks to the upside, Bitcoin pulls back, the altcoins are going to feel it a lot more on the bearish side. Let's go over to Bitcoin, where I did point out there is still bearish divergence on the weekly time frame here. The safer signal I am looking for to tell me that this bearish divergence is done playing out on this time frame would be seeing a higher high on the price action chart, along with a higher high on the RSI. The last high RSI reading to beat here is coming from this little top right here at about 75. Monthly time frame for Bitcoin, we are in overbought territory with bearish divergence, which has been happening for quite some time. However, has still yet to yield a red candle still, okay? Still very early into the month to say anything conclusive, but not something I lose track of, because do take a look into the last few times. Bitcoin has been in overbought territory on the monthly time frame here. And one data point on here is 1 month's worth of time as a reminder. If Bitcoin pulls back at any time, it could still affect the altcoins bearishly. That bearish effect will usually be greater if Bitcoin dominance is trending higher. Let's go to CRV. See what has gone on since last time. I'm going to go from the monthly time frame down to the daily and see if we have any overbought RSI readings or possible bearish divergence scenarios. Monthly time frame here, we don't have a reading, so let's move on to the weekly, where we are currently right under 50 here, so not in overbought territory. 3-day time frame here, we're currently about just right about 57, excuse me. So not in overbought territory, and if the price action was to make a higher high on this time frame, it does need to beat the last RSI reading of over 74 here, coming from this top to negate bearish divergence. Daily time frame here, we're currently at about right at 50, about 50, and very similar thing could be said here about negating possible bearish divergence if it was to make a higher high on this daily time frame. Okay, it does need to beat the last high RSI reading of 75 here. Let's go over to take a recap and see what has happened since last time. Since my last post, the bearish divergence, the bearish scenario did play out. Okay, where I did say if we start getting daily candle closes below this $3.10 level, just to be even here, then since then price action did break below this $3.10 level, which I said that was which I assumed to be the bottom of that handle of that smaller cup and handle pattern. Okay, and the reason I say that is because that was assuming that the bottom was in for this handle of the smaller cup and handle pattern. And if we actually do start getting daily candle closes below that initial bottom, that means we are still searching for a bottom. And I'm not usually in favor of being in price action in search of another bottom. Since then, price action did come down to as low as about $2.70. Okay. Right now, it seems like the bottom here would be about $2.90 right under that. Okay. If this daily candle does not start closing below this $2 and let's just say $2.90 here just to be even. I also want to point out that cup and handle pattern I mentioned last time is actually part of a bigger cup and handle pattern, thanks to one of my viewers that has pointed out to me. And this could be more easily seen on the weekly time frame, which I did not see last time. Now let's take a look into this bigger rounded bottom, this bigger cup and handle pattern here. Okay, this bigger cup and handle pattern here, will have a neckline of $3.70 because we have not had any weekly candle closes above this resistance or this neckline, okay, since August of 2020, okay, and that would also be the beginning of this formation of this cup and handle pattern. Measure target, which would be taken from the measurement of the neckline to about the bottom of the pattern here, which I try to be as exact as possible, and then adding it back on top of this neckline here will give me roughly about $7.05 measure target, slightly above $7.05 measure target. Now, measure targets are theoretical approximate targets only, may actually be different in real life price action, more or less. Let's take a look into some of the key supports and resistances relevant to this price action right now. Key resistance immediately would be the $3.15 fit level area here, followed by the $3.70 neckline of this bigger cup and handle pattern. Next up would be the fib level here at about $3.85 fib level area, or $3.80 to $3.85 range. After that, I could expect resistance from these past trading resistance here, about $5.85 to about $6.25 here, that range from these two wicks. Beyond that, it'll be the $25 big wick right here. Okay, slightly above $25. Let's see if that's the case on a shorter time frame. I could expect some resistance here by $8 as well if I actually break it down into smaller time frames as well. So $8 before the $25 big wick there. Key support now, first of all, would be the 3-day 21 MA, which is at about $2.64. The daily 50 MA, which is currently about $2.60, followed up by the $2.50 fit level area there. Now let's take a look into the bullish and bearish case scenarios here. Bullish case scenario, price action breaks above the pattern. The neckline, as I have said, would be the $3.70 resistance line. A safer signal for me to look for here would be seeing a weekly candle close and staying closed above this $3.70 neckline resistance here and go towards this measured target, mining some of those resistance levels I have just pointed out. And you guys could probably find more resistance levels too if you guys want to look down into smaller time frames, into more granular resistances that could be above the pattern, but I'm just going to point them out on the bigger time frame here. Let's go on the bearish case scenario. Bearish case scenario. Right now, I am seeing this smaller rounded bottom right here. I am focusing on this because I want to see if the bottom is in for this smaller rounded bottom of this smaller cup and handle pattern, which is also the handle of this cup and handle pattern. I want to see if the bottom is in on this smaller rounded bottom or this handle of the cup and handle pattern. If we are actually able to stay closed above this last low here of about $2.90, let's just say for even sake, then this tells me that this bottom could be in for this smaller rounded bottom here. However, if we start closing below $2.90 here, this tells me that we could still be searching for the bottom of this smaller rounded bottom here. The next level of key support here would be the 3-day 21 MA and the daily 50 MA, which are very close to each other. If those do not hold, the next level of key support would be about the $2.50 fit level area. And see if we have any other key supports right underneath that $2.50. It looks like the next one down would be the weekly 21 MA, which is quite far down if the $2.50 fit level area does not hold. Now, these are my bullish and bearish case scenarios for today. Let me know if you found it helpful. Give me a thumbs up if you did. Let me know your agreements, disagreements, feedback. I love to hear them. Hope you manage your risk carefully, and if you would like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.